Yeah, welcome to another video. So continuation on the non-for-profit making organization. Now the one that involves trading account. You can see the information given. We are giving the receipt and payment account. The receipt and payment account of an under 21 youth club. So the name of the club is under 21 youth club. So you can just write it. When you are starting your workings, try to write the name of the club, organization, or society that owns the account under 21 youth club. For the year ended 31st December 1999 is as follow. We are giving the cash book, which is the receipts and payment account. We are giving additional information. So we have the amount at the beginning that we used to start and the amount at the end of the year, which we want to prepare the statement for. Now we are asked to we are required to start with the statement of affairs. But even though you are not given this, one thing to start with is the statement of affairs to determine your accumulated fund. So it's going to be statement of affairs. Don't forget, it's for the beginning of the year. We want to determine the amount of capital we use to start. As at sorry of affairs as at first. So let me continue here. 1st January 1997. Now, do we have non-current assets? Yes, we have one. So we'll start with the non-current assets. Non-current assets. I said it earlier, it is no longer called fixed assets, it's called non-current assets. So for the non-current assets, we have machinery. Machinery, which is 25,000 naira. So we are working for the beginning of the year. Don't forget that. So this is the information for the beginning of the year. You can see it. Then with other non-current assets, we have furniture. Furniture, which is 20,000 naira. And that is all for the non-current assets. So this gives 45,000 naira. Then we have current assets. The current assets, starting with the stock, bar stock. So for the bar stock, we have 12,000 naira. Then the next, which is insurance in arrears, is a liability. Then don't forget, I said the cash at the beginning, balance buffer represent cash at the beginning. So we have cash in hand, which is 2,500. And what other non-current assets? That is all. So this give 14,500. We can then add it up with this, and it's going to give us 59,500. So less current assets, current liabilities rather. For the current liabilities, we start with bar suppliers. The bar suppliers, that is our creditors. So our creditor, that is 24,000 naira. Then we have insurance in arrears. We are owing. So it's a liability. You have an obligation to pay. So the amount, when you add this together, it gives 24,600. So we can less that from this. Now let's start 0 0. So this will give us 9, this will give us 4, and this will give us 3. We have 34,900. So the 34,900 represents accumulated fund, as I stated in my first video. Accumulated fund. So accumulated fund is now the capital when we are dealing with non-for-profit making organization. Now let's move to our bad trading account. But before we can move to bad trading account, we will need to determine our sales and purchase. So we are giving sales already, which is 45,500 naira, right? And we don't have any adjustment. So when you are making adjustment for sales, you may be giving the back debtor. You may be giving the debtor so you can make the adjustment for sales. But on the other hand, we have bad suppliers 29,000 naira, which whereby we also have bar suppliers here, that is at the beginning and at the end. So there will be an adjustment for the bar suppliers, which will lead us to control account for creditors, or control account for purchase ledger purchase. Either you call it purchase ledger control account, or you call it total creditor control account. So we are going to move to that. After that, then we'll move to bar trading account. So the amount you are seeing up here is the accumulated fund. Now let's look at the total. So I'm going to write total creditors control account. Now for the account, we're going to do that fast. Don't forget, total creditor control account, it has a credit balance. Now we are going to look at the amount at the beginning, the amount at the end. So bar suppliers at the beginning, we will call it balance brought forward. So the balance brought forward is the amount at the beginning, which is 24,000 naira. Now we'll look at when we close the account, the amount we collected at the end, which is balance brought down. And don't forget, your balance brought down is equals to your balance carried down. I will show you that one now. So the balance brought down is the amount we have at the end of the day, the amount owing to suppliers, 56,000 naira. And here we are going to write our cash, the amount we received, or the amount we paid, sorry, the amount we paid to the supplier. Don't forget, this is the amount at the beginning. So we paid some amount. So this is the payment side of the receipt and payment account. So we paid this amount to the supplier. We need to deduct it. We write cash. Since it's coming from receipt and payment account, which is cash book. The amount we paid, which is 29,000. And this balance is going to come here. It's going to be balance carried down. So let me adjust this small. I'm coming, let me adjust this. ₦56,000. So we have balance carried down 56,000 naira. Then we want to know our purchase. To know our purchase is the amount that is coming to this side. Don't forget, purchase, your purchase plus the amount you are in the creditor is the total. Your credit purchase plus this is going to give us the total amount that is going to be in this side, and it must be equals to this, since we have the balance at the end already. So that's the logic. Now when we add this up, this is going to give us 0,005, then 8. Am I right? Yes. Now let's look at this. To get our purchase, the balance here is going to be 85,000 naira also. To get our purchase is going to be 85,000 naira minus 24,000 naira, which is 61. So 61,000 naira is our purchase. Do you get the logic now? So you move to your control account to make the necessary adjustment to know the purchase for that period. Now we can now start our bar trading account. So we can say that bar trading account for trading profit and loss account. Trading profit or loss account for the year ended 31st December 1997. So we are going to be using the vertical format. I prefer using the vertical format. So let's start with the sales. We are even going to start with the sales, not let's start with sales. So we have bar sales. The bar sales is 45,500. So we don't have any adjustments in that again. Then we move to look for our cost of goods sold. Cost of goods sold. For the cost of goods sold, to solve for that, you are starting with your stock, opening stock. The opening stock is the stock at the beginning, that which is 12,000 naira. Then we are going to add our purchases. When we add purchase that is 61,000. Everything together will give 73,000 naira. After that, you less your closing stock. When you less our closing stock which is 32,000 naira, the result you are taking it to this place. So when we subtract this, it give 41,000 naira. So 41,000 naira is our cost of goods sold. When you now less our cost of goods sold from the sales, is going to give us our gross profit, which is 4,500. So 4,500 is the gross profit. Now let's look at if there's other income or other expenditure from the bar. Now we don't have any other income from the bar. It's only bar sales that we have. Now let's look at the expenditure from the bar. Do you have any expenditure? We have only one expenditure from there, which is bar wages. So any expenditure they are looking at is one that is coming from the bar. Don't make that mistake. Now we'll move to expenses. We are lessing it. So you can just like you can write less expenses. Less expenses. Now for the expenses we have wages, and that wages is how much? 4,000 naira. We have 4,000 naira. We are going to less that. So let me bracket it. When we less that, 4,500 minus we have 500. So the 500 is called, we are not going to call it profit, it is called profit from bar. Profit from bar. So the profit at the end is called the profit from bar. Now let me write this. The amount I wrote here is the accumulated fund. So let me write the profit also. Profit from bar, which is 500 naira. Because I'm going to rub this off now. We have 500 naira. So let's move to the next one, which is the income and expenditure account. The heading is going to be income and expenditure account for the year ended 31st December 1997. Now we are starting with our income. Don't forget what you have at the debit side is the amount you received, abi, or you can call it receipts. So the receipts also represent the income. Starting with our subscription, there's an adjustment for the subscription. I explained that in my first video, how to calculate or adjust your subscription. Now let's do that now shortly. For the subscription that is going to come to your income and expenditure account, so subscription account, and we will first determine the cash. The subscription or the amount of subscription that you are seeing in your receipt and payment account is the cash subscription, the subscription received in cash. So let's add it up. We have 36,500. That is the cash or the subscription actually received plus 500. So you are going to add these two amount together, which give us 39,000 naira. Now the adjustment there is that we are calculating for December 1999, 1997, right? But we have an amount for 1998, which is 2,500. We are calculating for 1997, but we have 2,500, which is for 1998. This simply represents subscription in advance. Now, subscription in advance is not for this year, but for next year. What are you going to do? You are going to subtract it from the cash so that you know the subscription we are actually receiving for this year. So that is the logic. Then we are going to less prepaid. It is known as prepaid. So the prepaid for 1997 is 2,500. When we subtract that minus 2,500, it's going to give us the amount back, which is 36,500. So when you subtract it, that this is how to work it. Do you get it now? So this is how to work it. In case if there's an additional information also, you are going to compute that. So we are taking 36,500 to our income and expenditure account. 1,500. Let's move to the next. The next one there, we are not dealing with bar sales. Don't forget, we have calculated that, and from our bar trading account, the profit we got was 500 naira. So the profit is going to come to our income under income and expenditure account. So we are going to say profit from bar, which is 500 naira. Add that to it. Then the next is we have received from dance. Received from dance. That is 10,000 naira. So that is all the income. Then we move to the expenditure. Let's add this up. This gives 0, 0, 0. Then we have 7, we have 4, 47,000 naira. For the expenditure, let's start from here. All the payments we made, starting with general expenses. General expenses is 4,500 naira. General expenses 4,500. Then the next one is printing and stationery. Printing and stationery, which is 1,700. And the next is machinery. So we are not dealing with machinery. We move to the next one, which is furniture. Furniture is also non-current asset. We move to the next, which is insurance. Insurance, that's 2,500. But don't forget, we have an additional information on insurance. The cash received for insurance is 2,500. From our receipt and payment, 2,500. Now, we have insurance in arrears. That is, we are owing an amount due for insurance that we're supposed to pay, but we are not yet paid it. It is yet to be paid. Now, how do you adjust that? Owing at the beginning is not for this year, but it's for last year. That is why it is at the beginning of this year. So any owing at the beginning, you subtract it because it's not for that year. We are working for 1997, but at the January 1997 is not for January 1997 because we just started the business. So it's for last year, which was brought to January 1997. Do you get the logic now? So anything that is not for this year, you subtract it. Owing, that owing 600 is not for the current year, therefore you subtract it. But the 540, which is owing at the end of the year, 31st December 1997, insurance in arrears, is for that year because it was the end of the year. So during that year, that's the amount you are owing. Therefore, you are going to add it. So you need to pay it. You add it. Anything for the year, add it. Anything that is not for that year, you subtract it. So you have 2,500 naira minus 600 plus 540. This gives 440. Then we have also bar wages. No, we have done that. We have adjusted that in our bar trading account, and that is all. Let's look carefully. No more adjustments. So we can now add up everything. We have 4,500 plus 1,700 plus 2,440. This give 8,640. So this 8,640, you are subtracting it from your income, which is above. We are subtracting it from 47,000 naira, which will give us 38,360. So 38,360 represents surplus of income, surplus of income over expenditure. We have gotten our surplus, which is 38,360. So let me write it down here, 38,360. Then we'll move to the last part. The last part there is our statement of financial position. There's not enough space, that's why I didn't write it on the board. The statement of financial position. Statement of financial position as at what's the date? 31st December 1997. Let's hope this space contains. Now let's start with our non-current assets. Non-current assets. The non-current assets we have machinery. And don't forget there's other additional information on machinery in our receipts and payments account. The amount of machinery, you can see that at the beginning we have 25,000 naira, but at the end we have 29,000 naira. So don't make this mistake of adding this machinery amount you have here to the current one here, because the value of the machinery has already increased. And don't forget, machinery is an asset. When it is used, you should depreciate rather than appreciate, right? This simply means that the 4,000 naira for the machinery has been added to the 25,000 naira. That is why we are having 29,000 naira. So as I said earlier that we are going to do an adjustment, we are not going to do that again. We just take this amount. Now look at the furniture, the same thing also. We have furniture of 3,000 naira, right? So we have 20,000 at the beginning and it's appreciated, which becomes what? 23,000 naira, which simply means that the 3,000 naira for the furniture has been added to this amount. Do you get it now? So we just move here. Instead of adding this amount to this, we are not going to add it anymore since it has been added, and we can see that the machinery or the non-current asset has appreciated. So we have 29,000 naira. Then for the other one, which is 23,000 naira, I'm going to write it now. That is furniture. And when we add this together, 000, we have 12, we have 5, 52,000. Then we move to our current assets. Current assets. The current assets, we have the stock, the bar stock. For the bar stock, the amount at the end is 32,000 naira. Then the next one, I said cash in hand at the end is coming to your balance sheet. So we have cash in hand. The cash in hand, that is 48,300. Then what else? So those are the two current assets that we have. Now let's add this up. We have 300, we have 0, and then we have 7, 8. 80,300. Am I right? Yes, I'm right. So let's move to our current liabilities. For the current liability, we start with our suppliers. Then we have insurance in arrears. So for the supplier, that is 2,000 no 56,000 naira. And for the insurance in arrears, we have 540. Some of these two, okay, sorry, let's don't forget we have subscription of 1998. Subscription for 1998 is representing subscription in advance, right? Because it's not for that year, it's for the next year, it's in advance. And that subscription in advance was made in December 1997. So this amount is coming to our balance sheet. Do you get the logic now? Any amount that is for 1998, advance that was made in 1998 is the advance made at the end of 1997. So it's going to 1998, right? Therefore, this is coming to our balance sheet, and this is subscription in advance. Subscription in advance, I said it in my first video under the introduction of not-for-profit maker organization. You are paying in advance. That is, the member paid in advance. When the member paid in advance, there's an obligation from you because you have not yet received the benefit of that money, right? So you can collect it at any time. Therefore, it is a current liabilities. We have subscription in advance, and that is 2,500. So you can now add all this up: 56,000 naira, 540, then 2,500. This will give 59,040 naira. So let's add this up also. Zero, we have 2, and we have 32. Okay, when we subtract this, okay, we are going to less, so subtract it. Minus 132,300. So this give us 73,260. I'm coming on 3,000. And let's look at the other side. This will equals to our, it will equals to the finance that we used to, the amount we used to finance this, sorry. So it is financed by, and the amount we used to finance, we are starting with accumulated fund. The accumulated fund, that's what I wrote here. We solved at the beginning, right? That is 34,900. So we have 34,900 plus our surplus. We are adding our surplus to it. The surplus is 38,360. The total is going to, it must be equals to this. So 34,900 plus 38,360. That gives 73,260. Therefore, since you can see it has balanced, right? I know that this is happiest moment of any accounting student's life when the balance sheet, the financial position balanced. So we have come to the end of the video. Thank you for watching. I hope you enjoyed the class. Please don't forget to like, share, and subscribe to my channel. Bye.